A dividend is a payment made by a corporation to its shareholders as a way to share its profits. When a company earns a profit, its board of directors can choose to either reinvest those earnings back into the business or distribute a portion of them to investors. How dividends work per share basis. Dividends are usually paid as a fixed amount for every share of stock you own. For example, if a company pays a $1 annual dividend and you own 50 shares, you receive $50 per year. Payment frequency. While many companies pay dividends quarterly, they can also be distributed monthly, semi-annually, or annually. Discretionary nature. Dividends are not guaranteed. A company can choose to reduce, pause, or cancel them at any time based on its financial health. Stock price impact. When a dividend is paid, the company's cash reserves decrease, which typically causes the stock price to drop by a roughly equivalent amount on the ex-dividend date. Types of dividends. Cash dividends. The most common form, where money is deposited directly into your brokerage account. Stock dividends. The company issues additional shares to shareholders instead of cash. Special dividends. One-time, non-recurring payments often triggered by exceptional profits or a specific event like an asset sale. Preferred dividends. Fixed payments specifically for owners of preferred stock, which typically take precedence over common stock dividends. Key terms for investors. Dividend yield. A ratio showing how much a company pays out in dividends each year relative to its current stock price, annual dividend/stock price. Ex-dividend date. The cutoff date to be eligible for the next payment. You must own the stock before this date to receive the dividend. Dividend reinvestment plan, DRIP, an optional program where your cash dividends are automatically used to buy more shares of the company, often without commission fees. Payout ratio. The percentage of earnings a company pays out as dividends. A very high ratio, e.g., over 75%, may signal the dividend is unsustainable.